Good morning to all of you. Thank you for being here. I hope you enjoyed the conference as much as I did. Um, okay, maybe starting just quickly, a couple words about my background, mining engineer. Starting on my first project, they put me on a feasibility study for an underground mine, and I had the pleasure to go through construction, go underground, and I was hooked. I spent the rest of my career doing feasibility, building projects, staying just long enough in operation after that to understand the good moves and bad moves done at design and move to the other one. I've done that with Falconbridge Copper, Cambior for many years, and stayed with IM Gold after Cambior was bought. And last 8 years there, I was SVP, Project Development and Technical Services. I was called by Dave Fennell, Highland Copper Chairman, to have a look at his projects and get into financing and create a vision for Highland Copper, and decided to come on board in 2017. I'll take the next few minutes to highlight why I like those projects and where we can go with it. First location, all of our assets are in Michigan. We have one project where we completed feasibility, Copperwood project, completed feasibility in June, ready to go for construction right after we're done with financing. For the growth that can come behind it, we have the old White Pine mine extension. 4.5 billion pounds of copper were mined at White Pine. There's still 1.7 billion pounds in the ground. The intention at this point is, as we start construction, get into a PEA for White Pine and see what we can do there, and really understand what copper price is needed and how much capital would be required. On the exploration side, we bought from Rio Tinto 450,000 acres of prime exploration ground in Michigan as well, with good potential for nickel copper, good portion of a greenstone belt, extension of the Wawa greenstone belt in southern Ontario, with very little exploration done on it, as Rio had no interest on gold side, and before it was owned by Ford, and really what they looked at was the timber and iron ore mines that were there. Shareholders, we have three main shareholders. Cisco came on board in 2014 when the Copperwood deposit was purchased. They have 16%. Greenstone Resources out of London has 17%, and Orion Mine Finance is in for 15%. So the three altogether, it covers about 50%, and that will be well needed once we get to the financing, and that represents 50% of the equity raise that we'll need. Michigan as a place to do business, being more and more recognized now in the top 20 jurisdiction. What really brought them up there was the switch to controlling the permitting process. It's not federal control, it's state control. Michigan and New Jersey are the only two places in the US. And really, for us, going through the permitting process, they've been good support and really help highlight the potential traps in the process. Location. On the west side, you see Copperwood project. East of it, 40 kilometers east of Copperwood, you have the footprint of the old White Pine mine, and going up north is where the remaining resource is still there. It's well-developed region, had lots of mining over the years, although White Pine was the last mine to shut down. It was 1995, but the infrastructure is still very good. Road, railroad, power lines, gas line, so somewhat easy to start a project there, and it minimized the cost on the infrastructure side. Specific to the Copperwood project now, we got into the feasibility summer 2017. As I said, we completed it end of second quarter this year. We used 42 million tons of the resource. to develop the mine plan. There's still an additional 60 million ton, but the idea for us was not to spend our cash drilling additional ton. It's a sedimentary deposit, Cooper Schiefer type of deposit, very consistent. So it's been fairly easy to transfer the tons, and we'll do that once we have cash flow from the operation. On the lower left in red, you see the portion we've used for the feasibility study, roughly a bit more than 1 kilometer wide, 5 kilometer long. It's open going under the lake, and when you look at the north side of the sink line, it's where you have the 60 million additional ton in the inferred category. On the section here, you see typically we're mining about 3 meter to 3.5 meters, a bit less on the east side, and the deposit comes to surface. So for development purposes to construction, we're ramping down 8% to 12%, and it goes to a depth of only 250 meters. So not that deep, no development in waste, and through construction we'll be stockpiling about 600,000 tons of mineralization. On the production side, we're coming in on the west side. It's a bit higher grade. So up front in the first few years, we get roughly 30. Well, we get on average we get 30,000 ton of copper. 40,000 ton of copper a year for the first few years. It comes from 6,600 metric ton a day from underground, 2.4 million ton a year being processed. We produce a concentrate. It's 25% copper in the concentrate. Mineralization being chalcocite, we get a very clean concentrate. So low contaminant, low sulfur, non-acid generating, and somewhat high silica content. So many smelters are very interested in getting the concentrates, so are traders for blending purposes. Operating costs were middle of the curve, roughly $1.50 a pound of copper. Comes from $40 a ton, roughly. It's very low abrasivity material. Hardness of the rock, it's 50 to 80 MPa, so on the low side as well. In the feasibility, we haven't considered continuous mining. It's a conventional room end pillar, but continuous mining for us is the way to go in the future. There are a few pieces of equipment that we very much like. We see potential to increase productivity by about 20% and a cost reduction of 15%. The concern in the feasibility was new technology coming in for financing and some of the geotech work that we have to do to switch to continuous mining. On the concentrate side, I mentioned roughly 40,000 ton a year, first few years, average 30,000. There's a silver content to the project, somewhat limited, about 1 million ounces over mine life, or roughly 3% of revenues. On the permitting side, the project was owned by Orvana before. They did a feasibility in 2012 on it. They filed for permits and received all the permits. But they all came with a shelf life of about 5 years. So 2017 to 2018, they were all up for renewal, which we did, incorporating all the amendments coming in from the feasibility study. Went through the public hearing process already. Very good support from the surrounding communities. And at this point, we're meeting monthly with DEQ, running the process, and we're all aligned for permits being received by the end of the year. Total capital to build the project, $275 million. We have communities very close to the project, a number of communities between 15 and 20 miles. So it's sort of minimized the infrastructure. Road access is there. Power line will be built in. We have power at 6.2 cents per kilowatt hour, so somewhat reasonable in the US. 275 direct cost for construction. When we put in all of the working cap needs and fees for financing, interest through the 24 month of construction, we get up above 300 million at 315. We're assuming on the timeline that we have, it's 24-month construction, critical path development of the underground mine to be able to sustain the 6,000 plus ton per day. At the end of fees, we come up with a return of 18% roughly, using an average price of 315. You have to remember we completed that Q2. At that time, copper was at 325, so although 315 seems high from our perspective today, we remain very bullish on the copper price. We like the fundamental. 2 years of construction would put us early 2021 for commercial production. So it gives us a payback of 3 years plus for the project. Opportunities. We've done the feasibility to build it and go in operation. So there are opportunities that were kept aside. We'll work that once in production. We didn't want to have too stretch a number for the feasibility, as it's important to us we can deliver on that. Obviously, copper price gives us significant leverage. There's a fair bit of resource that can be easily transferred from inferred to measured and indicated. Continuous mining we like very much. On the presentation on the front page, you have an idea of what we see for ourselves testing up front. Geotech, we're not open underground, it's greenfield. So on the geotech side, we feel the numbers are still conservative on the sizing of the pillars and the bolting pattern. It will have to be reviewed once we open up. Metallurgical recoveries use 86%. Although white pine over its mine life average 88%. So there again, 86% might be where we'll start, but we feel that with the knowledge that we have from white pine, we'll be able to increase the recovery. Tailing disposal, we haven't touched this one as it was already permitted. It's a 3-stage construction. At this point, we would be looking to store tailings underground once we open up. It would save a fair bit of sustaining capital and reclamation costs on the back end of the mine. Our timeline, we will be pushing hard to complete financing in Q1 next year, although today, when you look at the equity side of it, it's pretty challenging. But we started the process on the debt financing. The idea is to start construction in the first half, ideally doing some clearing and grubbing during the winter, 24-month construction to get to commercial production in 2021. White pine, we'll do a PEA on it early next year. Sizable deposit. You look at this section there, it's 12 kilometer wide. All of the darker dots that you see, they're holes that were drilled in the past with average grade between 1.4 and 2% copper. On the side, you're more in the 1 to 1.2%. So the idea for us is to really understand well what copper price is needed to pull the trigger on white pine after we're done with copperwood. Exploration, that block there is where we're located, 450,000 acres. On the north side, great potential for nickel copper. That package was bought, as I mentioned, from Rio. Eagle Mine, operated by London Mining, has been carved out of that package. We have a number of targets ready to drill. We intend to look for a joint venture partner to drill that, not spend our cash there. We'll focus more on early work on the gold side and the base metal potential on the south side of the region. So finally, vision for the next 5 years. Obviously, first step, construction, Copperwood, and get the cash flow from 2021. While we do that, we'll do the PEA and continue to push White Pine, do feasibility in 2021, 2022 on White Pine and looking at construction, so we're in operation in 2025. And we'll maximize what we can do on the exploration side to continue to increase value for our shareholders.
Thank you, Dennis. We're officially out of time, but since it's coffee break, we can take a question, I think, if there is any. No. All right, well, thank you all. We've got a 15-minute break and then back for more.